Hello friends, James Stevenson back with part 16 in my Tesla Q4 2022 earnings forecast video review series. That's always a mouthful. Let's check in with Loki, see how he's doing. He is snoozing in bed. And quickly get back to where we left off. You can keep an eye on Loki using the Loki cam below if you're not interested in learning about what I have forecast for Tesla's earnings over the next quarter, which is Q4 2022. And the 4 quarters that follow that in 2023, and I accidentally lost my place. So let's see how fast I can get back to it. Pretty quick. Alright, so in parts 14 and 15, I reviewed my Q4 income statement, and then my 2023 and 2024 income statement forecasts. So let's keep going down the page. In order to make the numbers big enough for you to see them in a YouTube video, I had to zoom in on this page, but if you're following along with my Twitter thread where I shared my forecast on November 20th, you'll get a lot more columns on the page than this. Alright, so let's see where we left off with a GAAP net income forecast for Q4 of $5,133 million. That's a whole lot of GAAP earnings. That would be the most ever by far, and I don't think a lot of people are expecting that, especially in the big bear market we're experiencing in 2022, where a lot of companies are going to be reporting lower earnings. Tesla is going to be reporting a lot more earnings. Now, it may not be a number this big because, as I mentioned in the previous video, I'm placeholding $1.6 billion worth of one-time tax favorability that Wall Street's going to back out anyway. So the numbers aren't going to be quite this good after Wall Street adjusts them down. They'll be subtracting 45 cents this quarter. I have 11 more cents per share forecast in Q1 of next year. So, and these are both on a diluted basis, not on a basic shares basis, because that's how Wall Street does their math. What's the difference between that number and that number? It's almost entirely $302 million worth of stock that Elon Musk has coming to him. Not all of that has vested yet, but it's about to, because the highest CEO plan revenue milestone should be achieved this quarter, which is $75 billion worth of 12 trailing month revenue. So if I step you into this formula and what it's doing, it ought to be looking, man. Alright, so what is this formula doing? It's taking the largest number of so it's either taking the previous quarter's number, because it can't be any lower than the previous quarter was, or it's taking if the average quarterly annualized revenue over the trailing 4 quarters is greater than 175. Okay, so it's going through every possible tier, and it's identifying that when you take the average of these 4 quarters, it's finally a number larger than $75 billion. All right. So that's the 12th and final tranche of Elon's 2018 CEO Performance Award. Those are stock options that Elon gets to exercise to buy Tesla stock at only $23.34. Why is it fair to let Elon buy at a price so low from Tesla? Because that was the price that Tesla was trading at on March 20th, 2018. Somewhere around there was the basis date for his plan, the date on which he agreed to work in exchange for a 100% at-risk performance award package. So he took no salary, no wage, no guaranteed cash bonus of any kind. Just, hey, in order for me to make any money at all as CEO, I need to grow the market cap of this company enormously and grow revenue and grow EBITDA. And because Elon has done all of those things since, he earned those tranches, which were voted on by the shareholders, excluding Elon and Kimball. They were not allowed to vote on the issue, and passed with a 70% approval rating. All right, so I probably spent more time on that than I should have, but that's the difference between the basic and the diluted share count. And so that's how you get your basic and diluted earnings per share. When people ask, hey, will the compensation for Elon dilute shareholders? Yes, it will. How much dilution will there be? It's the difference between the basic and the diluted here. Ish. It's close. So about 15 cents worth of dilution on earnings per share after Elon buys all of the shares he has coming to him. He'll have to sell probably about half of them to pay his taxes. So it's a great deal for the U.S. government because they're going to make maybe $100 billion worth of extra tax revenue income based on Elon Musk's performance as CEO of Tesla. He will be earning the U.S. government maybe $100 billion-ish worth of revenue when he has to pay for all the taxes that will come with those options over their life. Okay. So what do we have here? This is what the Tesla stock price would be if you believed a 30x multiple on the next 12 months adjusted EBITDA. So what's this saying? It says, hey, we haven't gotten to the adjusted EBITDA line yet, but it's down here. Here it is. So over the next 12 months, including my forecast for Q4, so these are the next 4 quarters that I'm forecasting, here's how much EBITDA I think Tesla will be generating. Way, way more than they've been generating over the trailing several quarters. If you take that number and you multiply it by 30, and then you divide it by the share count, that's how you would get to a $338 price target. But I have Tesla's EBITDA continuing to grow. So again, if you believe a 30x multiple, which people believe during bull markets and not during bear markets, when interest rates get high, multiples compress, right? This is where I would be forecasting Tesla stock prices if we were in a bull market where people believe 30x next 12 months adjusted EBITDA multiple. All right, I do have to forecast the average stock price to figure out the stock comp. I'm just leaving that here for the next time Tesla does a stock compensation package for Elon. That should happen sometime soon. And trailing 6-month market capitalization. So a few of these lines here were needed to figure out how much of Elon's stock compensation he earned, including these quarter-ending dates, which don't need to be precise. They're just for doing math with. And then I've got a CEO bonus forecast here. There's almost no expense left to pay on Elon's compensation. He will make another 25 million shares, bringing him to a total of 304 million shares worth of cumulative CEO bonus shares issued as of this quarter. And that's it for him until the board gives him another compensation package, which I have happening a few quarters out into the future. So by Q4 of 2024, I have Elon earning more stock. So he could enter into a stock compensation agreement that would require him to raise the market cap or whatever, and then not earn any of those options until late in 2024. These are just placeholders. But I am forecasting that he'll be earning some more Tesla shares in the future. Returning to Q4 2022, this last $4 million is the last that Tesla will be expensing against the income statement, which works differently from vesting the shares. So you can see I've got Tesla starting to expense progress against a future compensation plan about a year before Elon would start earning vesting shares under that plan, which is how the GAAP accounting works. You don't wait to record the expense until the shares have fully vested. You have to record expense on your income statement as progress is being made towards vesting them. So that's probably a good enough place to end this video and say, if you've enjoyed today's video, click the like button. If you're not subscribed to my channel already, go ahead and subscribe to my channel and ring the notification bell to get alerted when I post fresh content. And if you find my videos valuable and want to say thank you, you could do that in the comments by just saying, thanks, James. Or there are ways to support me. You can click the video description and find links to Patreon or to join my YouTube channel. And a special thank you to Kathy Kitchler and Halter Ferguson Financial, my executive producers. And I'll see you in the next one.